Hello, everyone. So my name is Oge, and you can call me the Femi Trader. And this is a beginner forex trading course, and I just want to explain what forex is for those who intend to go into forex trading and do not know where to start from. So this is the very basic. And when you start from the beginning, you will be able to understand what is Forex all about. So I'm going to be sharing this course with you. Okay, so you want to pay attention, grab a pen and a paper or your journal and please put something down. All right. So even if you pay for a mentorship class, they will not go through this with you. They can only give you the cost and expect you to cover everything. But today, I will be breaking it down for you. So please pay attention, listen, get one or two information. And when you understand the basics, then you can then go onto the chart and apply everything that you have learned. All right. Okay. So let's move into what is forex trading. All right, so many people do not know why they are trading forex or what forex trading is, but I'm here to explain that to you. So before you learn what is forex, you need to understand what is forex. That is the first place to start. You need to understand what is forex. So we just going to break it down, and yeah, so forex trading, just like the name is, foreign exchange, that is you're exchanging currency. All right. So foreign exchange market is where the words currency exchange at a mutual agreed price. Okay. This exchange rates change every second, which makes the market constantly fluctuating. So today you might be buying at a lower currency rate, and tomorrow it might just skyrocket and move to a higher bid. So it depends. So this is what it is when we talk about forex. So we are trading foreign exchange, foreign currency in simple terms. So imagine you're traveling from UK to US, you exchange the pound, the British pound for USD. That is Forex in real life. So now imagine doing that digitally as a Forex trader. So as a trader, you can make money when currency goes up or down. So in this example, you travel to the UK and with you have the Canadian dollar. So definitely you cannot use the Canadian dollar in the UK. You have to exchange it. So you look for you look for a currency, maybe like Western Union or a currency store that you can exchange your money. You talk to them about the rate to tell you how much they are able to change your currency for. You give them the money and they give you the pound. You give them the Canadian dollar and they give you the pound. That is Forex in real life. Okay. So Forex trading is the largest financial market with over $6 trillion traded every single day. So this is not just for Forex, but then the industry. So the industry comprises of the stock market, the Tokyo stock, and all of that. But we're gonna get into that. So 6 trillion every single day is traded. Is that, if that is not the largest financial market, I don't know what else it is. So currency, for example, that are traded are Euro USD, GP JPY, JP USD, and so many like that. So we're gonna get into it. The financial market include the forex industry with over $5.1 trillion traded every single day. That's the volume on an average, right? And the New York Stock Exchange about $22.4 billion on an average. So we have the Tokyo Stock Exchange, we have the London Stock Exchange. Okay, so these are the what have been traded every single day on the average. If that is not a lot, I don't know what is a lot. So the next one is, we move to the next slide, which is the opening of the market. So the Forex exchange market is open 24 hours 7 day. For forex exchange, the forex industry is only open 5 days a week. That's Monday to Friday. So it is closed on the weekend. But but it's closed on the weekend. However, for the Bitcoin um trades are open on the weekend. So I think sometimes Saturday, but not Sunday. So Forex market are always quoted in pairs. The price for a pair is how much of the quote currency it costs to buy 1 unit of the pair. So when you trade Forex, you're always buying one currency while you're selling the other. For example, if you are trading euro versus USD and it is 1.35361. So just have it in mind that your base currency is the euro and the quote currency it's the USD. And that is applicable for every currency. The first one is the base, while the other one is the quote. Okay. Okay, how forex trading works. So when you are buying euro USD, you expect the price of euro to rise so you can buy euro, that's the base currency, and you sell USD, which is the quote currency. So for example, if the euro is stronger against the USD, you make money. So if you have predicted that the euro is going to be strengthened against USD and you place a buy, that means, and it goes that exact way, you're going to make money. And the same thing as the sell, if you expect the price of euro to fall, so you sell the base currency and you buy USD, which is the quote currency, then you make money. So the same way. So it depends on what you have seen in the market that wants to make you buy or sell. Okay, so talking about how Forex works, talking about how Forex trading works, for one currency to go up, there would be another weakening against it. So if Euro USD is going up, definitely the USD is going to be weakened. So all currency cannot go up at the same time. That's not possible. There is always going to be a winner and a loser. So in the market, it's either the market is going bullish, right? Either the market is going bullish or the market is going bearish. So when the market is consolidating, if the market is not going bullish or bearish and it's just there, you want to stay out of the trade. Okay, so you can only be in the market when the market is going bullish or is going bearish. So when it is not going, is going sideways, it's not balancing, then just stay out of the trade. Okay, so Forex trader weigh up whether a currency looks likely to strengthening or weaken against another. Okay, so who are the people that trade Forex? So the people that trade Forex are the big banks and commercial financial institution, that is the hedge funds, the pensions, and another people that trade Forex are the central banks, the government. They come up with the policy to control the market. So when you hear about the news, for example, the employment news, the interest, the rates news, and the non-farm employment news, or every news that comes out, they are the one that make up the policy and they are the ones that push it out and they decide where the market goes. Another people that trade the market are the large financial companies like Amazon, eBay, and the rest of them. Okay, so when you are in the UK and you want to buy something from, maybe for example, you're buying from eBay, and you have to pay your money and they would convert it to their currency, that is Forex. Okay, so far you're not paying with your country currency and they are converting it to another country currency, that is digital Forex trading. Right. Okay. So the fourth people that also trade forex are the retail traders. Retail traders, they trade retail, they trade them as well. People like me, people like other traders that you've been hearing about. We are the retail traders and we trade as well. Okay. But then we have little funds to trade with, and that's why we link up with prop firms and the rest. But we're gonna get into it. I don't want to rush you. But these are the people that trade forex trading anyway. The big banks, the financial institution, the central banks, the government, the large commercial companies like Amazon, eBay, and the rest of it. They are the people that trade Forex. So just move to the next one. How do we determine whether a country pair is going to go up or down? The thing about it is that we don't know. You don't know if if you're going to make money as a trader. You don't know. Yeah, I keep telling you, and that's it. That's the truth. You don't know. Forex trading is a probability game, all right? It's a probability game. Every trader outcome is random. No matter how confident you are, no matter how confident you are while trading, it's a 50% chances that you would win or lose a trade. There is a 50% chances. However, what you can do to increase the probability of winning is by developing an hedge. So what is an hedge? An hedge is what separates winning traders from losing traders. So I'm going to explain that in detail. How does a forex trader become profitable? You can only become profitable when you focus on the edge instead of the outcome and stay consistent in the game. The hedge, when I talk about the edge, the hedge is your trading strategy. So the strategy that you have implemented in your trading, that is what will make you become profitable. So let's talk about the hedges now. You have to master these three things that I've listed out. Okay, number one is the method. Number two is the money management, and the third one is your mindset. I'm going to explain them to you in detail so you can understand. So when I talk about the method is your strategy. Okay, there are a lot of strategies that you can implement. Some of them is the indicators. Indicators can actually be useful for you as well. Why on the chart, the indicators can tell you when to buy and when to sell. So some of those traders that they also rely on indicators. The second one is trend line. So some people depend on trend line. That is their strategy. So they know when the market may be cut out, or they know how to do it. So trend line is another strategy that you can implement to make money from the market. And the third one is I call it smart money. So smart money is also another one, and they have price action is another one. So it depends on whichever strategy you want to implement. Make sure you test that strategy in the market using a demo account, and if your winning rate is more than your losing rate, then please go ahead with that strategy. Okay, so the next one is money management, which is the risk management. I would say this is the very important one. This is the most important thing that you need to know as a forex trader. So risk management is one, your strategy is one which you want to implement, and the second one is the risk management. That is your capital. So what are you risking? What are you giving to the market to be able to get what? Okay, so some people use 2%, some goes for 1%, some go for 0.1%. But then in later on the course, I would be explaining what the percentage which is recommended for you to use. Okay, so and the third one is the mindset. The mindset is your psychology. So sometimes while on the trade, you will have a lot of emotions, especially when you are on a live trade. Your emotions will kick in. The fear of missing out will kick in. A lot of things will go on. Sometimes your BP can even rise. But then you want to be able to manage your emotions. When you lose a trade, how do you react to it? Do you go ahead breaking things, or do you go ahead nagging? Your emotions is very, very important. Why trading? You have to put it in check. You have to understand that this is a 50% chances. There is no guarantee. But then your edges, if you have the right strategy and you have tested your strategy out and it is working, it has worked in the demo account, so definitely it's going to work in the live account. So these three things, you have to put them into check. You have to make sure that you know and understand these three, you master these things, these three M's, to be able to develop your hedge. So let's move on to the currency pair. The currency pair are quotes of the exchange rate for two different countries. In forex markets. Okay, so for example, I'm going with the GPB. So GP is the British, whereas the P is the pound. That is British pound. So, and I'm quoting it against GP, which is the Japan, and the Y is the yen. So GP, GBP, JPY. You will be hearing that a lot. So people match, they pair two currencies together, and that's how we trade. That is this example. So these are the currencies that you need to be looking out for. These are the currencies that you need to be trading. They are the major ones, and they are the ones that are volatile in the market, and you should be concentrating more on this one. As a beginner, I would recommend you to look at the minor pair first of all, and when you are then, you're going well with your trading, then you can be mixing up with the major pairs. So the major pairs are the one with the USDs, and the minor pair are the ones without the USDs. All right. So the USDs, they are quite very volatile, and the ones without the USD, they also move market, but they're not as much as the pairs with USD. So another pairs that you should not even be looking at this ones, USD, SGJ, and all of those things. So these ones, you would be on that trade forever. Like you're gonna be on there forever. You may not even catch any trade. Yeah, you may not even catch any trade. You will be here forever. So please just ignore this one. So which currency pair to trade? So you just want to stick with one or two, three, four maximum. For maximum as a beginner, you should be looking at USD, Euro USD, GPB USD, NZD USD, USD JPY, USD CHF, and USD CAD. Please, these are the most common pair, and you should be looking at it. Just pick four of them, four that you are very comfortable with. You start with one, understand how the pair move, then you can add it on two, then that's how you progress. Okay, so let's move on to the terms that are used in Forex. So the terms that are used, we've got PEEP. PEEP, when you hear PEEP, PEEP is a percentage in point. A PEEP is the fourth number after the decimal point, right? So one PEEP is about 0.0001. So the fourth number after the decimal point is the PEEP, right? So for example, if you are placing a trade, Euro USD, and the price of the market was at the time 1.0626, knowing that 6, which is the fourth number, is the PEEP. Okay, so if your market should go from 1.2468 to 1.2470, so you have moved from 68 to 70. So that is 2 pip. So that means if one pip is paying you like $10, when you move to 2 pip, that means you're getting $2 in profit. And that is basically it. So the next topic is gonna be, are we looking at the trading view? Okay, so there is also a lot size that we need to talk about, but then when we get on the trading view, I'm going to explain it to you. I don't want this video to be too long, but watch out for the next video and understand how to set up your trading view. All right. Thank you. If you are not subscribing to the channel, please subscribe. I've got a lot of videos that will be dropping in on this channel very soon. Thank you so much for joining, and I love you.